Good evening, everybody. How are you? I hope everybody's doing well. I definitely want to welcome you to the webinar tonight. Just doing a quick sound check. Can everybody hear me okay? I just want to make sure you can type a yes or a Y in the chat field and just to let me know that my voice is projecting. Just going to let people respond, and great. I'm definitely hearing some everybody coming through as well. So I want to make sure that the things that I've got. I use Yahoo Instant Message as well too. So I know a couple of you are chatting on there as well too. What I to send out alerts daily. So I just want to make sure I have everything going on my screen. Okay, and can everybody see my screen? Right now I show the US dollar yen, the Aussie, and the Euro yen. Can this able to see the screen okay? Perfect. All right, we'll get started in a few minutes. I just want to welcome you and just hang tight. I'm just going to let a few other people join. Had a pretty decent sized room, so I just want to make sure that the few who had responded that they're going to attend and give them a shot to keep going. Okay, all right, we're going to get started. One thing that I would love to do is just the importance of having a strategy. And having that strategy and being able to map out and lay out the playing field on a trading market, whatever market it is, being able to lay that map out. And I want to talk a little bit about that map that I put out. And again, this is introductory to some degree. So, you know, I do go into one-on-one sessions with people to give them the ins and outs of how to lay this out themselves. I leave no stone unturned. I definitely want to help as much as I can, so I've set things up in some ways where I can deliver that information. One, through these webinars, through GoToMeeting, through Yahoo Instant Message, all free services to connect in. I'm sorry to say, you know, education information isn't free, but I do like to do this at least once a month to give people an opportunity from all walks of life or from all areas that want to participate. So one thing that I begin to do is I map out the day. I map out levels in the market because I want to break it down a bit. So I want to be able to see the market in a way that gives me clarity as to what I want to do. And I have a few things that I want to go over is that I have come up with rules to help me define that. And so let me put in my username and password. So I have what I call rules. I, again, didn't invent the wheel, didn't invent the markets, didn't invent the range and the high, the low, the open, and the close. People before me have done that. So what we're doing is we're going to use this data to help us map out what we think is going to happen. We want to forecast. We want to be proactive. We want to try to get our answers to questions as when's the best time to buy, when's the best time to sell, and then where's that area at, and how to depict what markets do I want to play. I want to play and be on a team, pick a team that's winning. There's two teams in trading. There's the buyers and there's the sellers. I want to pick the right side of the market each and every day or do the best I can to do that. And hopefully I'll shed some light on strategy and how to come up with that. You'll notice that I have 5 rules. These 5 rules always will give me a majority in the market. It will always tell me which side I should be playing, the long side or the short side of the market. And there's going to be some times when I'm going to help myself get into the market, and then I want to ask questions, well, when do I want to get out of the market? And how well is my trade doing? You know, am I willing to keep this trade on? I'm up money. Am I willing to keep it on? But I don't have, and the rules are telling me not to keep it on. You know, when you get through those, I always have an answer to my question. And so when you're sitting behind your screen at home and you're wondering, what the heck should I do next? That's what I have these rules for that help guide me along the way. And the point is I worked all this out ahead of time. I made deals with myself, and I said I had these rules, and I have this homework rule, and I call it the proper side of the day mood. There's two pieces to this rule. Proper side of the day mood. That's the green line that I'm going to depict. It's going to be a solid green line on my chart. And then I have there's the day mood, the midpoint of the day, then there's the weekly mood, the midpoint of the week, the last 5 days. So I want to know where are prices in relation to that line. Are they above? I'd rather play long. Are they below? I'd rather play short. Pretty simple, pretty straightforward. If they're in between, the day and the week, I mean, there's mixed, but that's half the rules met, so to speak. The proper side of the neutral line, that's the red line. That's where the market closed the prior day, where it basically opened today. So it's giving me a guidepost as who's winning today's session. So immediately when it hits 2 p.m. Pacific, the start of a new day, 4 p.m. Central, basically 5 p.m. Eastern, just doing the time zones of the U.S., for instance, is that, I want to know when a new day begins. I want to know when a day ends and a new day begins. And because I know that's just like the sunrise and the sunset. People go to bed, shake off yesterday, and today, tomorrow is a new day, so to speak. So it gives you that reset button, and people think that way. We follow the sun. And those, generally speaking, are also the most active times of the day when you follow the sun. You go into the schedule section of the website. I have a lot of information on here and a lot of free type tidbits that sometimes everyone doesn't even take advantage of. I put in here, I say, you kind of get the time of the day, just speaking in terms of around the U.S. time zones. I say, well, what time of day is it where it's most active when, things relating to the U.S. dollar, things relating to Canada are the most active at 8:30 a.m. New York time to 11:30 a.m. New York time, Eastern time. If you're translating that and you live in Chicago or you live around the Midwest, 7:30 a.m. to 10:30 a.m. Central time, that's the times when pairs related to the U.S. dollar or the Canadian dollar are most active. If you're in LA, like I am now, 5:30 a.m. to 8:30 a.m. Pacific time, pairs relating to the U.S. dollar or the Canadian dollar most active. That's where the bread and butter is. If you're thinking about London or some of the overnight sessions, at least for me, but what pairs are most active? When you want to transfer, then I put these in Pacific time, and you could do the math and the translation if you're somewhere else outside of LA. But 11 p.m. to 2 a.m. Pacific time, pairs relating to the euro, the pound, or the Swiss, those are the most active times. So, and really, in essence, to sum all of this up, is follow the sun. Wherever the sun is rising in the globe or around the world, currency pairs related to that country are going to be the most active. Why? Because that's generally when people wake up. They go to work, and that's when the biggest economic reports are released at that time. So you're going to get more bang for your buck. So if you're wondering what's the best time to play and when's the market moving, that's what traders want. We want the market to move. When is that happening? Well, follow the sun. It's a simple thought. It's just that's what people are creatures of habit, and the sun goes around the globe every day. Hopefully, otherwise we wouldn't be here. But the point is that that's when those pairs are most active. When that sun is rising, that's when those reports are coming out. So, with that, when I take in the when is generally the best time, but we can't be up 24 hours a day. We don't always know when the market's going to hit that area that I want according to rules. And that's what you have the computer for. What I'm saying is I could sit down. I've been doing this for many, many, many years now. Got in the market since 1989 is when I started. Board of Trade, started out as a runner, became a broker in the 30-year bond pit, then went off on my own in 1997. And ever since then, I've been on my own, trading my own money, 100% take the wins, 100% take the losses, pay for my insurance, pay for everything. Through there, I don't come to work, I don't make money type thing. So along the way, I've built education around that because one is I know if I could continue to teach people, it keeps me sharp. I mean, that's my selfish reason. My world reason is that I like to help people as well. I like to keep communicating and help them out the best I can to get them into a game that's not easy. You know, I mean, risking money, there's emotion around it, and I try to at least take away that element as much as possible, but keep that human touch, but then use that computer to help us out. So I have my homework rules. The green lines you'll see on the chart, and on the day and the week. The solid line is the day moved halfway back. The dotted line is the weekly move. Price actions above, I'd rather prefer to play the long side. Price actions below, I'd prefer to play the short side. Why? It's because that's who's winning. If we're below those two areas, sellers are winning in the game more often. If we're above that area, buyers are winning more often in the day session or over the week. And the proper side of the neutral line, that's the previous day's close, basically today's open in a 24-hour market. So price action above that red line you'll see on the chart, rather play the long side. Price action below that red line, I'd rather play the short side. So those are the things here. And then I have mapped out a grid, levels of expectation in the market. How far do I think the market's going to go? How far do I want to wait for a pullback before I might want to re-enter or participate for the first time? So I like to see at least one level minimum move, but a two-level preferred move. So I want to see prices move up 2 levels before getting short, or I want to see prices fall 2 levels before getting long, because that's when I think things are going to start to get exhausted. And that comes from some studying, and I do help people in classes and teaching on how to come up with those verbatim. You will, like I said, no stone unturned. But for today's idea, I want to just talk about the strategy around it and how I put it together. And so I prefer to have 2-level moves. So if I have the market moves up 2 levels and I'm on the proper side of my green and red, I've got homework rule 1 and rule 2 met. And then a window of opportunities, I just don't want to like jump in front of a speeding train. When the prices are rallying 2 levels, you know, I want to make sure that they pause. I want to see a flip from an uptrend to a downtrend before getting short, or a price flip from a downtrend to an uptrend before getting long. So I want to see that happen first. I want the market to tell me at that level or that expectation was worth it, or working, or feeling good at least. So I want to like do a little spot check. It's like, you know, you go to the doctor, you're just getting a checkup on things. And then there's plenty of oscillators out there. There's, you know, moving average convergence, divergence. There's stochastics. There's so many things. Pitchfork. There's so many oscillators out there. Pick one. They all pretty much work the same way. They're mathematically derived, a little bit different. But in the end, you're going to find out that, hey, they're pretty much telling you the same thing. They're overcooked and undercooked at certain distance faults. So if you need a little help into the background of why I'm looking for 2-level moves, well, that's generally when RSI indicators and stochastics get overcooked and I feel there's a top in the market. Or you see a 2-level drop. Same thing. Price readings get to 25 or lower, or price readings get to 75 or higher. So I can get a gauge in the sense of when I think things are going to turn lower, and that expectation ahead of time. So I want to be able to map those, and I want my rules to be on my side. So what I do is I map out these levels, and I map out for many markets, because the point is that once I know rhythms in the market, and I know that things are mathematically driven, and things are mathematically driven and money driven, and you see that, hey, the markets generally move a certain distance on average every day, and you can kind of get good estimates as to what you think may happen. And from that, you start to map those prices out. And when I map these prices out, you know, from my chart here, I'm going to talk about dissect how I dissected the markets today and how I was able to take advantage of it just a little bit. So the U.S. dollar, Aussie, and the euro, I identified these as markets I want to play because of one is when I map, and let me do a few things because I want to keep my chart in a spot where I could also keep the website stuff that I've been just telling you about on one screen, so I could map this a little bit better for you, so I can flip things around. So what I want to do is one market that I looked at today is the U.S. dollar yen, and I want to just show you a little bit of where things were at and tighten things, and where I basically started everything and where things are at. So I want to try to hold it here if I can. Well, one thing is that you'll see is my red line was set at 100.02. That was on the U.S. dollar yen. So I'm going to go up here, and you're going to see it on my grid. I've mapped out all these different markets. We're talking about currencies tonight. I come from the futures market, so 30-year bonds are my bread and butter, but you're going to see that these rhythms can be mimicked across multiple markets based upon taking highs and lows to build my levels. So basically, taking kind of averages and things like that to give me a sense of how far things are going to travel. But from there, my red line, 100.02, you'll see it here, 100.02 on my neutral level. My level 1 up, 19, 36, 53, 70, all the way up to level 4, and then beyond. I keep mapping these things out. I have an idea how far things are going to go, but I want to be able to participate in certain areas and certain things. So I just want to go through there and say, here's my map, and then what I do is I place that roadmap on the price action. And what I do is this is where the day started. So from there, and I want to be able to see, so I'm just going to insert some shapes to get some reference point. This is when a new day began. Well, technically it ended right in here where the market went out, and then from this it says how MT4 maps their days out and maps things out. Here's where the market basically closed, and then the market starts doing its thing. And I map my levels, 100.02, and I map them up and I map them down, and I say, all right, well, here's where the starting point was. And then here is, as the day's progressing, when you start seeing some levels or some blue boxes in here, this is when I woke up. This is the U.S. session. This is when I sat down to play. This is in that 5:30 a.m. to that 8:30 a.m. I put out alerts from 6:15 a.m. to 8:15 a.m. Pacific time every morning. Those of you that are in the webinar tonight, that are in the class here tonight, you'll see those alerts that I send out, and I start to bring those. So what I'll do is I will bring some of those up of what I said. I'll put it in Notepad. I won't show one of my questions. Hold on 1 second. I'm just going to get some of those things of what I began to say basically at the beginning of the day. $11:21. Map out. I'll pull up a Word document. So I could basically paste this stuff in so you'll be able to see what so from here, and these are all in Pacific time, so when I started seeing some things here, I started saying, good morning, today's reports. I put out a snapshot of these 3 markets that I'm interested in. I said right at the gate, because one, as I said, the U.S. dollar yen, this is what we're looking at. Price actions above the red line. It's moved quite a bit up since it moved up to about level 5 when I woke up in the morning. But I said I have a bullish bias. I said support expected to develop on pullbacks for long plays at 100.70. So one thing I was looking at in the market is where that high was and where that pullback, where I started to see a pullback, a flip from a downtrend to an uptrend. So I'm looking for a 2-level drop, but I'm looking for at least a 1-level minimum, and this was about that 1.5 level drop. So I'm thinking 100.70, and I'm thinking the upside targeting session high to potentially the 101.20 area, which is up when price action hit up towards here. I was thinking, hey, this could come up to the next level, up to this area here. But again, this is from some of the initial thoughts. But if you're seeing price action, and one is it started above the red line, price action was moving, and things in these markets generally trend. Things stay moving up. Generally, who's winning generally wins the game. And you get that idea what was going on in the Asia session at the beginning of the day when the sun's rising here, and then you get in the U.S. session, things finished higher as well. You're getting into the European session. recession now, but at least what you're seeing is what happened in Europe, what happened in Asia, what happened in the U.S. And when you sit down, you don't necessarily know what's going to happen, but when you see that London and Asia are bullish on the U.S. dollar yen, that continued on throughout. And so what I'm looking for are pullbacks to areas where one level minimum to 2 level pullbacks that would, and when that happens, my green line where the halfway back was on the day, or my dotted green line where that halfway back is on the week, and then the red line where things are at. So when I get these pullbacks and the market flips from downtrends to uptrends, these are the areas, these blue boxes are my windows of opportunity. And then underneath I have my RSI oscillator to help give me a sense of, hey, is the market overcooked to the long side? I would like it to be reading about 25 when I want to get long. But all that happening on the proper side of the green or red. So from there, as we're marching along and we start to see flips from downtrends to uptrends, and we see, hey, you say, hey, Mike, we haven't been able to get involved. We haven't been able to get involved. It didn't come back into the zone. Well, later, late in the day, and as we start to get into, the lunch hours, so to speak, in the East Coast, or basically we start to get into when London's leaving for the day, but the U.S. is going on lunch. And we do see that prices, they fell about 1.5 levels here, flipped from a downtrend to an uptrend, and gave us a window. And from this window, price action pulled back into this window, this area where we identified, let the market show you support first, let it show you where that support is. You're bullish. Price action, green line below my feet, below this area, red line below this area, flipped from a downtrend to an uptrend, and the price action came right in here and gave you an opportunity to get long the market. And get long the market, what am I thinking for? Hey, where's the price action possibly potentially going to go? Well, maybe go back up and retest the session high, and I go to the next level higher. And those were kind of how those comments were in what I was beginning to speak about. So from there, I mapped out, hey, the U.S. dollar yen, waiting for prices to pull back into my zones in those 1 level, 2 level pullbacks, and then searching for the market to hit my objectives. If I'm right, I'm right. If I'm wrong, well, I'm going to stop out whatever I'm trying to make, that 1.5 levels, those 2 levels is what my risk is and what I want to risk on this idea as well, too. So, I got to at least have an equal expectation at the very least, where if I'm trying to make a level to 2 levels, I better be willing to risk that amount as well, too. So there's some things there, but any questions on at least identifying, I mean, again, there may be questions on how to build the levels and all this stuff, but let's not get into that. But any questions on, hey, I'm waiting for the market to pull back, it's showing me support, I'm identifying here's the area, here's the opportunity where the market came back in that area where I saw that, and it was all on the proper side of my green and red line. Is everybody with me in there? And let's kind of use it as a poll. If 1 being that you don't understand and 10 that you do understand what I'm saying so far, kind of give me a thought on that. From 1 to 10, what are you thinking? And I'm seeing some people are responding to Yahoo and Twitter that you understand it as a 10. But let's give a few other people a chance to definitely respond to that. I definitely am interested in making sure that you understand that. So, just that you have a good sense of it. Okay, great. I see, an 8 to a 9. I see a 7. I see a 10. I see a 9. So, it feels like, you're at least you're getting that part of that concept. And the thing is hopefully you're seeing the order, how I'm, putting some order into the madness. You see all these candles and you see all these things, and I have these just lines of just expectation in the market, and then balancing that with what the market's actually given me. So this was just one, is that I just don't want to necessarily give you any impression that I'm speaking in terms of hindsight. Well, I'm not. I just know I'm letting the market do its thing, and I want to get on board with it. This is a bigger, badder animal. It's got more money than me. It's got more money than all of us put together than we could ever throw at it, because we can't control when the market goes up or when it goes down individually. We can't control how fast, how slow, how much, when, all of that. But what we can do is it gives us clues as to which side we want to play. And from that, from the Fed minutes yesterday, and they're not talking that they're going to start raising rates or tightening things again or get into that posture, but there's hints of it. There's hints of it, and there's hints of it, a stronger dollar on the horizon. I've been talking about this for the last couple of years about the stronger dollar on the horizon, and I even mentioned it in terms of how do I start to identify that in the book that I wrote, that I put out about Forex, and just so from there you can always just see that stuff on the site if you're ever interested. Again, I do try to help, but I'm not going to push you. I'm not going to email you. I mean, you'll get some automatic emails from GoToMeeting, thank you for coming and things like that, and a transcript or a recording of this session or things like that, but only if you sign up and ask for it. But you can click on the book that we wrote just about this exactly, and it's published by Wiley. My website's taking a second to get over there, but it'll eventually go. So we'll bring that up in a second when it goes. But just coming back to the market, so it's definitely there, and it's on Amazon. But this is the book that Steph wrote, the last chapter of it. And she got involved in it. She helped me just talk about some of the emotional elements that markets bring, but also from the standpoint of the strategy. I put those things together, and Wiley asked me to write a book about it, so we did that. So that's always at your disposal if you want to do that. But one thing that I know is that, hey, there's plenty of markets out there, and you can't always put all your eggs in one basket. And what happens if the market doesn't get to a point where you want it to get to? I mean, sitting around for 2, 3, 4 hours is not always fun and not getting a trade. But what I'm saying is there's gold in waiting. There's gold in doing that. But how to use your time is not just to hammer on one market and just to, start getting yourselves into situations that get you in trouble, so to speak. Or, when you put your hand in the cookie jar and get caught because, hey, I just want to make money and I've got to make money, and if I'm not trading, I'm not making money. But the thing is that you wouldn't just do that in an investment. You don't just go out and buy houses every day or flip cars every day or do those things, a really expensive high-ticket item, because they cost a lot, and this could cost a lot. And the point is about investing putting money into an idea only when your strategy or when your thoughts are hitting. Don't play outside of it. What's the point? I put these blue boxes for a reason for me, reminders of this is where I want to invest my money. And then when I put one in there and then the market gives me that, this is where I want to invest my money. Because if I'm starting to buy highs and stuff and the market goes a level against me, then that makes me nervous. I don't want that. It happens, but I don't want it. And I want to identify, well, how much does that cost? How much is that? So a few things that I do is I have my grid, my levels, which is all well and good, that each of those levels today were 17 pips wide. I got to know how expensive that is. I got to know, what does that mean, and then how am I going to make the money that I want to make out of that? So that's why I put a risk calculator together, and you have an idea, and it's updated for the 22nd, and I'm going to flip these too as well, because you're going to see that, I update these daily, so you'll see it all flip to the 22nd levels, and everything is updated now where things are moving again. But just to get a sense of some of these things where, let me reset this. It's set to the pip values set to the standard professional rate. And you say, all right, well, if I'm looking at the U.S. dollar yen, and I see that, hey, well, each level right now, they're about $11 a pip. I'm sorry, $12 a pip. So each level in the market is about roughly going to cost you on the standard professional is $210. I think it's going to move about 4 levels in a day, but you can see that, hey, I could map them to 8, I could map them to 6, but this is what I think is going to happen, and this is generally the distance 1 to 2 levels is what I think is going to happen in terms of money. And this is mapped first on one lot. And you have to make up your mind to say, hey, am I willing to risk $210 to $421, risk side loss? And of course, everyone wants to make that. But that may be too expensive for some, and that's the best part about Forex is that you can map this down to some of the mini micros, down to a dime, and you can make that area roughly in that zone of 17 pips, $1.70, or you can make it $1. And then you could trade multiple lots, where I hate trading one lot. I hate it. They're so limiting. You're all in or you're all out. So I think you always got to get to 2. And for my ideas, I want to map myself to 10 lots. I want to put in, basically maybe start in and put 2 here in this area where I first want to get involved, maybe put 3 in another area, put another 3 in as I'm evaluating and things move along. But you want to be able to map this according to what you want to risk. So the point is I have here is this is a risk calculator where it's mapped to 1.25% of your account, or 2.5%, or 3.75. This is basically where I don't want to go beyond this type of parameter. And you map out, hey, I think I might get 1, maybe 2 opportunities to trade in a day, and I map that out and say, all right, well, if I'm all in on the standard professional, and I put a 10 lot on, and I'm in on 10, I know that this is what could happen to me, $1,700 to $3,400. That's what can happen to me. So, and if I'm okay with this, I should be okay with this if I'm trading this. I have to be okay with this, because this, and I have to make this realistic within the parameters that I set, that this is what this idea, what I want to risk on this idea. And I got to make that. And you got to say, hey, you know what, do I need $1,000 in my account? Do I need $50,000 in my account? But if you start playing standard professional rates and you say, hey, my idea isn't supposed to go beyond this, I say I better have some money in my account, and which I do. And I better have some money behind me in my bank account if I'm starting to play these levels, because you know what? I'm not an all-in guy. I'm not an all, but I want to be able to play what the market's telling me. But what I'm telling you is that you don't have to start here. You want to get to here, but you don't have to start here. It takes me some time to get to here, but I'm here. I'm doing this. I want to do this. But that's why what's great about this is you can map this to here. And I know everybody in this room could risk $34 to learn this game, to learn what it is. And I know everybody in this room, once they learn it and they play within a strategy or within parameters, that they can move this, keep this 10 lot the same, and move this to 20 cents and give themselves a raise when you're doing things right. And basically put yourself in the penalty box when you're doing things wrong. Take things away from you if you're sitting there, you're not following your rules. Go down to a dime and take $34 lessons. Don't take $3,400 lessons is what I'm trying to tell you. Put yourself in the penalty box. I learned some things, and I didn't learn the strategy, but what I learned from people that I talked to, my roommate in college is one of the biggest S&P 500 traders in the world. I just happened to meet this guy in college. It was wonderful. It was great. But what I learned from him, not in college, I mean, we had a lot of fun together in college, but when he was in the trading floor and he started hitting it, is basically what I asked him is not about a strategy, not about, hey, where to get in and where to get out. I wanted to know what he did when he was on a losing streak, what he did when things are, the shit was hitting the fan, so to speak, excuse my language, but when things are really just going bad, how did he handle it and how did he get himself out of those messes? And what he said to me, Mike, he said, you know what I do is that I was, in the pit or on the screen, and I was doing 500 lots and I was doing 1,000 lots in the S&Ps, and I would do that when I was hitting it good. But when I got smacked and I got whacked around, and when those people in the pit wanted to give me 500, I would only take one contract. I'd say, no, not today. And I'd work my way out of it. And so he kept his money there. And he didn't just blow up when he knew things weren't going right. And you know that, hey, when I'm wrong once and I'm wrong twice, you know something. Hey, this isn't working today. And then you definitely know it's strike 2 when you're swinging. And if you ever played baseball, you know, and then you know what strike 3 means. You're out. But there's 3 outs generally you get. And I'm saying strike 1, strike 2, strike 3. And anything beyond strike 2, strike 3 is kind of that slippage, the stops. So, it's buffered in, but I'm stopping here, and I know at the strike 2 zone. So you can begin to map this out and know all of this ahead of time, because one is you're planning the level. You're planning what this distance is, this 1 to 2 level span of distance, what that's worth on your contract. So important to do this. And all this is pre-done beforehand, so you know exactly what you want to do. In the one-level pullback areas, you put a couple on. Maybe in the two-level pullback area, you put 3 or 4 on, and you build in this area, and you say, this is where I want to get involved in the game. This is where I want to do it. And you say, and when it's there, I know exactly how I'm going to do that. I know exactly how many contracts I'm in. I know exactly pretty much in the area of what I'm going to make or what I'm going to lose. And I want to be able to map that out 3 times. You know, strike 1, strike 2, strike 3. But I want to play in zones when I get to it. And I want to show you that, hey, you could have done this as well. I picked the Aussie as well, and it's the same thing. And this was a bearish setup. The red line was here, and as I started getting into these zones, where I could begin to start participating is when I start to see pullbacks in the market. And when I get those pullbacks, where's my green line and where's my red line in relation to those? Here's the session low at the time where my pointer is. You know, this flipping from an uptrend to a downtrend, if it starts getting up in this zone, it's about a 1.5, maybe 1.25 pullback. I want between the 1 and the 2. That's what I want. Then I didn't get it. It pushed down to here, and then it started to pull back, flip from an uptrend to a downtrend. Market gets up into this window, gets up into this area where I find that, hey, there's resistance here, and this is where I want to participate. I knew it here. It happened here. So I know where I can participate. And then it flipping, price action flipping down. We're still into the 21st. We're starting to move into the 22nd in this flipping in a brand new day. But when prices hit down here and rallied up, started flipping from uptrends to downtrends, uptrends to downtrends, you finally got your opportunity. This is the 2-level pullback. What you want, RSI is reading 75, red line, green line, well above your head, and you see what the market's doing right now, and you know this ahead of time. You know what this 1 to 2 level map and this road map is, and you're playing the Aussie, same thing. You want to trade 10 lots in the Aussie, standard professional, you better be willing to throw around $2,500 or $5,000. But put it in the areas that you want to participate in, and then wait for the market to get there. You don't just blindly go out and buy a house without looking at it, making sure the walls are stable, making sure there's no cracks in the walls, or you have inspections and you do all of these things. You wouldn't lay down all that money, you know, and buy a $500,000, $1 million home and not put some thought behind it before you did it. I mean, you're playing contracts that are where you put one on, really the total value of it's about $100,000 in worth. That's what you're playing when you put one contract on, and that's what happens if, hey, the currency went to 0, you know, somewhere where that's at. But the point is, you know, in that fluctuation or the ebb and flow of market action in the 2 levels that I defined in here, that's where that's at. But if you can't handle it, I know we could all handle making that money. I mean, basically say yes if you want to make $5,000. I mean, I'm sure you do. But always ask that same question. Do I want to lose can I lose $5,000? How do I feel on that? What do I feel like if that happens to me? Because that's what can happen, and it will happen to you at a moment on a trade. I don't win on every trade, but I want to identify trades where I want to risk my money, because if I'm wrong, I could sleep at night if I'm playing how I wanted to play. If I'm doing things outside of that, then I'm in trouble, and I don't want to put myself in trouble. And if you can't handle this amount on the losing side, you can't play this. So tone it down. Tone it down. Get it to an area where you say this is reasonable. Get it to an area, because you can adjust these pips to simply this, to get yourself what you're looking for, and all the way down to a dime. And I know everybody here can basically trade 10 lots at a dime and risk 25 to 50 bucks on the downside and the upside. So everybody tell me if you can't risk this, but everyone on the line, you could risk 25 or 50 bucks to learn, right? Of course you can. So the thing is that you learn to see if you can pay attention, and you can be disciplined to wait for the zones, and you can start to map out a strategy. I'm hopeful that you are seeing that there's a strategy here. I didn't just make this stuff up. I've got 5 rules where I can always have a majority. when it's three rules to 5 rules are hitting, I want in. So this is when prices hit a low, rally 2 levels back, that's a level. That's a rule. So let's kind of pull back the rules against what we're talking about. We've mapped out the money. We've figured out what we want to risk. Now, coming back to the rules in themselves, let me kind of get this to where we can kind of see them all. So we get everything in plain sight. We have our green line, our day mood, that's our solid green line. We have our dotted green line, where's the weekly mood at? So we have those green lines set. We have the red line set. So where that's at, price action is below, so we're favoring the short side of the market. And I'm looking for, when I'm thinking about getting short, prices need to move 1 level minimum up, 2 levels preferred before getting short. So here's the low of the session. Here's the 2-level pullback. Window of opportunity, when I'm thinking about short, price flip from an uptrend to a downtrend before getting short. That happened, flip from an uptrend to a downtrend. First time back at the test is when we actually got and can get this trade. So from there, so I have the window of opportunity rule, and then the relative strength index. I'd rather on the short side, reading 75 for overbought conditions. I say cover longs, look to go short. Typically, you will see this reading after an RDS 2-level rise, prime hours, or maybe a 1-level rise in off hours. But the thing is where you're seeing from the low, from this is that, and you see where RSI readings were when this actually hit. We're reading 75 at the time. So, hey, I don't know about you and me, but there was 5 rules met here. 5 out of 5 rules being met, and it hit here. And you had the opportunity to participate in here based upon this strategy that I've laid out. And I've looked at 2 markets. You know, at 6:15 this morning, I was talking about the U.S. dollar yen being bullish. We tile everything kind of. Let me pull up U.S. dollar yen, Aussie, and Euro yen. Get all these Euro yen. Let me pull up the U.S. dollar yen. So these are the 3 markets I was talking about this morning, and you kind of see where those opportunities are. I was bullish U.S. dollar yen, bearish to Aussie, and then I was bullish to Euro yen. So I had 3 markets. I started to say, hey, flip from downtrends to uptrends, or at least get a 1-level pullback, flip from a downtrend to an uptrend. I never got a trade here. I never got anything here. It didn't happen. So I narrowed it down to 3 markets based upon what's moving or what would possibly, when it hits a high and pulls back 2 levels, or when it hits a low and pulls back 2 levels, where I've identified out of the 10, say, hey, these 3 are at least giving me an opportunity that if it does what I want and gives me it can give me a potential of a 5-roll setup. So I look and focus in on those markets. And 2 of the markets gave me something. U.S. dollar yen gave me the 1-level pullback, 1.5-level pullback. Gave me, basically, let's kind of go through the rules on this market and when it finally happened. And I said, the homework rule, upper side of the green line, the 2 green lines. I have the solid green line here. I have the dotted green line. So price actions above. We're looking for the long side. The neutral, the red line, base price actions above. So I'm favoring the long side. So we've got those 2 rules hammered, net, have price actions above. The 1-level minimum to the 2-level preferred. So this moves about a 1.5 levels back. So let's call this, I have a half of this level move. So I have 2.5 moves. Flip from a downtrend to an uptrend, come back into the window. I have the window of opportunity rule. So I have homework rule, red line rule, half of rule 2. I have rule 3. I don't have rule 4. The RSI is not reading 25 when this hits. It's reading middle of the road, around 50. So I have homework rule, rule 1, 2 rules. I have half of this, 2.5 rules. I have window of 3.5 rules, basically net. So I'm sorry, I have 1, 2, 3.5. and I basically have the middle of this, and we call another half, maybe 3.5 to 4 rules met. Is that a majority? If I'm not mistaken, that's a majority to say, hey, yes, let's do it. Everybody see that there's a majority there? To say, go long. Try it. Now, and then identify, hey, it's not a 2-level pullback. It's not a 5-rule setup. This isn't coming into maybe being a 10-lot idea. If 10's my all-in, and I want to get started, maybe it's worth 2 or it's worth 3. You know, you guys do the math. If it's 3.5, if you do the calculator, I'll pull up a calculator of this, and oh, why isn't it showing? Yeah. Well, 2.5 out of 5 rules, that's 50% of your allotted amount. You've got 3 rules, it's maybe about 6 or 7. You do third, you know, basically from there. So you can start to do the math on there, how many you want to do, you know, of the 10, or maybe, you know, you do up to maybe 6 on this idea. But you can map it out and say, hey, you can adjust it. And if you can't risk $1,500 to $3,000, then you sit there and you start toning it down. Tone it down to $1. Get it to an area where money isn't controlling, dominating your thoughts. If money is dominating, it shouldn't be forgotten, but it should not be dominating. That's the only thing you can think about. Because whenever you start sweating, when you haven't moved and you're sitting down and you're sweating and all you can do is think about money, you're trading too big. I'm sorry, we got to find that balance. So from there, you start to map out, hey, Aussie took some time, 6, 7 hours, 12 hours, you know, before it even gives you something that you want. U.S. dollar yen, you know, you're sitting around for 2 or 3 hours before you get hit on this. You watch the euro yen. If you're only playing the euro yen, you wouldn't have got a trade. That's why, you know, bring him on three markets out there, get hit on 2 of them, make a level on one, and make 2 levels on another. Anybody want to do that? I do, but it doesn't. It's not always just perfect. It doesn't always happen this way. Sometimes I get hammered too. But if I keep myself in check and play on the side that I think is winning and identify it with, hey, where's price action from yesterday? Where is it today? Who's winning? And if it's in alignment with where the market's been, then go for it. I mean, the market's been telling you where it's been going ever since we raised the debt ceiling first time, maybe back in August 2012. I think it was a year and a half, 2 years ago, 2011. Well, now let's go into the daily chart on the U.S. dollar yen, and let's, because I'm going to refresh on the object list. I'm going to get rid of some of this stuff so we can begin to see some things here. And we pull some things. Let's go to a weekly chart and start looking at this area when we started getting into that August 2011. When we started getting into this zone here, this is when what began to happen when the government raised the debt ceiling. We started seeing some things in here. And we started seeing that in this, right in this zone here. I mean, before that was going on, the U.S. dollar was just, it was ugly. It was tanking. Everything was gloom and doom. Before that, everybody, you know, against the dollar, no way, it's done, it's done, it's done, sell it, sell it, sell it. The Swifts against it was kind of the safe haven, but the dollar was getting beat up. And that was what happened. But when they basically finally did something about it, did what they needed to do, put their ducks in a row, all of a sudden then things started coming back for the dollar. And it's been happening. You can come back into the Aussie, you go to a weekly chart on the Aussie, and it's the same type of thing. Let me remove some of this stuff just so we can see what's going on here. Same type of thing. You start to get into that August 2012 area. You start getting into here, what's been going on in the Aussie ever since that and where price action is and where it's going. It's been negative. And, you know, and now they're talking about now maybe doing something and start raising rates, which given that extra boost to possibly a stronger dollar in the end. So you can start to at least go and say, hey, well, when things are kind of in alignment with the fundamentals saying sell the Aussie, kind of buy the dollar, or buy the U.S. dollar, kind of sell the yen on it. And hey, go. I mean, the euro yen. I mean, it doesn't have anything to do with the dollar, so to speak. But you could see what's been going on here. It's been no secret what direction the market's been going on the euro yen as of late. But the point is that one thing is you play with what you know, and you start to wait for pullbacks and what's been the direction of the market. Which ways have been going? And you can start to make some clear, concise decisions. So, from there, you can at least begin to participate. And I wanted to, again, is just to reiterate the idea of a strategy. And you have an idea, and you have a majority rules strategy. And say, this is where I want to invest my money. I want the rules to be met. I pick the area where I want it to get to, and I look at multiple markets to say, hey, I like this market, I like this market, I like this market today, and this is what I want. If I get it, I get it. If I don't, I don't. At least I'm waiting for what I want, and I'm saying that opportunity is there. It's there daily. It's there weekly. It's there for your career. It's there. And if you map out the money element to it as well. And what I want to just tell you while you're all still here is that this is at your disposal. You have access to this. You have access to these tools. And I do want to tell you, and I don't want to be pitchy, but I've never offered these types of rates of what I'm offering on things, of what I'm doing right now. For kind of a package, you say, hey, I want to feel out who you are. I want to feel out who you are. I want to know what's going on. I say I give 4 weekly one-on-one meetings. There's 4. I've never done this before, where I've given each week for 4 weeks. You have the ability to be one-on-one with me. I tape it on. I do an online meeting just like this. It's taped, so you can watch it as many times as you want. And from there, and you get access to the website. You get access to the ebook. I have a whole ebook lining this whole thing up and kind of explaining everything here, and then live one-on-ones to basically talk about it and tell you how I do this. So going back to the site, you get the meetings are recorded. It includes all these levels of support, so you get unlimited email Q&A with me, unlimited. The ebook that I just told you about. The alerts, every morning I tell you the setup. So the 3 markets, I give them to you at 6:15 in the morning, every morning, Monday through Friday. So I give you those alerts and tell you kind of where I'm at, what I'm waiting for, and how to adjust. I'm only on for 2 hours in the morning, but you get the idea, you understand. The 30 market grid, so I tell you I update that every day. You get the risk calculator, so you get access to that. And, the software and things, you need a trading platform, you need those things. But the things that how I teach things, that part is free. It's for the first month, it's $250 for that first month for those 4 meetings. And then if you want to continue on, you need the access to the alerts, and you want the grid, and you want me to do that, it's a $50 recurring. And you can cancel it at any time. For some people who really want to get into the nitty-gritty of it, I just have a $250 a month standing. It's just recurring. So you get 1 meeting each week, one-on-one. And I've never offered $250 a month. I never do it, and I probably never will. I'm probably going to keep it this way to the end of the year. But the point is that you get 4 hours with me, and then you get access to the site, every day from there. I don't. So anyways, but from there, it's you can participate or not. It's laid out there. I'm not going to hound you for it. You'll get an auto-generated email from GoToMeeting to be in this meeting, to get the recording of this if you want to watch it again and talk about it and think about it and do those things. Then you could always contact me on the site. Easy way, go through PayPal and get involved if you want to get involved. And once you're done with the sessions, you don't need any more one-on-ones with me, but you still want to have access to the site. You trust my homework. You trust me doing it for you every day. You don't have time. You've got another job you want to run. Well, I talk to people and say, hey, I talk to people who keep a full-time job and still trade, because you let the computer do the grunt work. You let the computer do the work for you. You say, all right, well, I'm doing the manual work in the beginning of identifying what I want to do, and I can come back in and check in on this every so often, every hour, or every couple hours, and do that. But I could set the order, say, this is where I want to buy it, this is where I want to buy it, this is where I want to buy it. And you know it kind of ahead of time. You just check in on it, you know, once an hour, once every 2 hours, or you check in on it once a day. Say, hey, I want to wait for a 2-level pullback, and that's the trade I want. And when I sit there and I look at it and say, this is where I want to get involved, then if it happens, it happens. If it doesn't, it doesn't. And then they can go about their day. They can, you know, make sure that there's money coming in with the other job, and you can put some trading and see, hey, is this working for me? Do I like the risk? Do I like going? Do I like doing these types of things? And if you say yes, then you do it. And if it starts to work out, it becomes a full-time gig for you. So I'm trying to help anybody who wants to try to transition and do that the best they can and the best I can. So if you're interested in that, get involved. I'm here. I hope you enjoyed tonight's presentation. Fingers crossed it recorded properly, and I'll upload it into this meeting, and you should be able to get a link to it. It's a Windows media file, so there's there. But if you ever have any problems with it, you can always go to the GoToMeetings website. You might, if you're on a Mac or something, you might have to download a codec or something, but all the software is free and it's harmless to do that. But hopefully everything recorded fine, and it'll get posted in at some point. I think you'll get an email from me on behalf of GoToMeeting with this recording. Hopefully it helps. I'll do another one of these. I may not do it next month because it's the holidays. It's fall smack around that Christmas holiday time and New Year's, but I would definitely bring it back to light in January, probably, you know, generally somewhere around the last Thursday of the month. But I'll post that through Meetup or however everyone's found me, whether it's Meetup or LinkedIn or Yahoo Messenger or your already existing client. You'll get, you know, little notifications of these webinars, these check-in webinars that I do once a month that are free. So I enjoyed having you here. Hopefully you enjoyed the material that I put together and the work that I put into a strategy to try to help you compete. It's helped me compete for the last 20 years. I've been doing it for a long time. I mean, you can read about me. You can find me, look me up on the you know, the National Futures Association, you know, the NFA, our regulatory body, how long I've been in the markets and in the game and doing things to see where I've come from. I'm happy to help you out in any way that I can. I'm happy to give you recommendations of maybe other educators if I'm not for you. I know them all. I taught a bunch of them. I don't talk about the who, but there's some big names out there that I've helped throughout my career. They'll never mention me, but that's okay. That's fine. But anyways, I love to help people, and I love to be around. So, hey, if there's anything I can do for you, feel free to check in, and have a good day. And I always say trade strong, trade smart, but always, always, always have enough money to come back and trade tomorrow. So have a good night, everybody.